Hey everyone, welcome back to the channel. Today's episode's pretty big. The Federal Reserve just wrapped up its May meeting, and while they held rates steady, the tone was pretty cautious. Inflation risk is back, unemployment fears are rising, and here in Phoenix, we just hit a market reading that we haven't seen since 2009. To be fair, 2007 and 2008 were the big years that were really tough. 2009 was the comeback, but we are still hitting numbers close to 2009, so there's something to be said with that. And what we'll do is I'll break everything down, what this means for buyers, sellers, and anyone thinking about making a move right now. So first off, the Fed chose not to cut interest rates in their May meeting. Jerome Powell emphasized that risks of both higher unemployment and higher inflation have increased. And why? One major factor, or really the biggest factor, is tariffs. Powell explained that if these tariff hikes are sustained, they could lead to a rise in inflation, a slowdown in economic growth, and an increase in unemployment. Powell said, quote, "We believe the current stance on monetary policy leaves us well positioned to respond in a timely way." What does that really mean? They're holding steady for now, they're watching the market, and that's really all they know how to do. So what's next for rates? Now, this is where things get interesting. At the latest Fed meeting, they projected 2 rate cuts before the end of the year. But now, market expectations have shifted again. The CME Fed Watch tool, which is my biggest recommendation, it's free. If you look it up on Google, you can see what the anticipation is for each Fed meeting on interest rates. And here's a pro tip. Mortgage interest rates usually move in anticipation to what's going to happen. So, for example, they're not going to cut in June, but if they were going to cut in June and the CME Fed Watch tool showed that, then about a month leading up to June, so now until June, rates would start to decline in my experience. Now, I don't have a crystal ball, but that's what I've seen in the past 2 years of this nuttiness, so hopefully that helps. So the CME Fed Watch tool shows a 76% chance the Fed won't cut in June. Just a week ago, that was only 32%. So I was anticipating that they were going to cut rates, and I was kind of wondering why rates haven't started to come down. Powell did dodge confirming any cuts, saying the Fed will wait for more clarity before making a move. It's kind of a broken record at this point. He's in the full wait and see mode like he has been the past few months. So back to the Phoenix market. It hits a 2009 buyer territory. So what does that mean? The Phoenix housing market, according to the latest Cromford report, the CMI or the Cromford Market Index is down to 76.2%. That's officially a buyer's market. Anything below 100 is serious buyer's market. We haven't seen it that low since April 2009. So supply, 7.4% above normal. Demand, 19% below normal. And the contract ratio, which shows how many houses go under contract compared to active listings, just dropped to 32.7. That's a clear signal that buying activity is slowing and homes are sitting on the market longer. So inventory is surging and prices are starting to slide even more. Active listings now sit at 26,500, steadily climbing week after week. For context, we had around 31,000 during the 2009 post-crash. So we're getting close to the post-crash. The median sale price down 6% month over month. So that's only 30 days. Now, for year over year, that's down 3.3%. So you can see the difference in there. New construction prices nearly dropped 10% from March. Resale prices are down 4.4% from the last month. All the gains we saw since last July wiped out in 30 days. There's now a $38,000 gap between what sellers want and what buyers are willing to pay. Sellers are still listing their homes around $469,000 on average, but the median price, the median sale price is down $431,000. That's why we're seeing more concessions, because sellers are buying down the rates, covering closing costs, or just sitting on the market, which also skews this data because it's not in the data, right? It's on the background or behind the scenes. Phoenix's list to sale price ratio is 97%, but with frequent price reductions before going under contract. So the real spread is likely bigger. Mortgage rates are trending downward at the start of May, thanks to decent inflation data. But then it reversed. As of now, we're back to around a 6.9% for a 30-year fixed, like average across the country. But that's still lower than recent peaks of, it was around a 7.25%. But the volatility is pretty real. Here's the Fed's dilemma. As tariffs increase inflation, the Fed may need to keep rates high to combat inflation. But tariffs also tank job growth. So that would make the Fed be forced to cut. So it doesn't really go tit for tat anymore. They're walking a tightrope, and the housing market feels every single step of the way. So there are opportunity for buyers, but warnings for sellers. We're seeing cracks across nearly every city. Scottsdale fell out of seller territory, so seller market territory, and is now balanced, which means it's about 100 to 110 on the Cromford report. Phoenix is on the cusp of becoming a buyer's market. Only a few areas like Glendale and Chandler are holding as weak sellers markets. If you're a buyer under 500 grand, that segment is just heating up. Sales in the 450 to 500 range jumped 16.6% in the past 30 days. So if you're a seller in the 1 million and up market, sales are down 11%. Spring buying season didn't come through like we all expected. So in conclusion, what's the bottom line here? The Fed's on a pause, but the Phoenix market is not. Buyers are gaining leverage. Sellers need to reset their expectations if they actually want to sell in some sort of timely manner. And as always, I'll keep you updated. So be sure to subscribe if this info helps you make smarter real estate moves. And if you need any mortgage questions or real estate questions answered, my link for my consultation is in the description. I'm happy to talk to anyone about anything real estate. I'm here to help. And thanks for watching. I'll see you in the next one.